Hello, this is the Tradesight U.S. Stocks and Futures Market Preview for Thursday, the 9th, and Friday, the 10th of February, March, 2017. March already, gosh. Here's a look at the ES front month futures contract. This is the S&P in futures form. This is the daily chart. What you can really see here, which is interesting, is that we were kind of stuck for about 6 days, starting about 2.5 weeks ago, almost 3 weeks ago. Just real flat, almost the same close for several days in a row, really narrow ranges, really boring. And then there was the president's speech to Congress. The market gapped up. It doesn't look like a gap here, but it was a gap up. Kind of held that ground for one day and then just has been slipping back every day since then. And now we're right back to that same closing level that we were at. So, the net of the last 15 trading days or so is just dead flat, which is not productive. The ranges have been horrible. And that's about it. Let's go through all the indices as usual for the end of the week. We do one market preview for Thursday and Friday, as most of what we've looked at for the week has played out by the time you get to Friday, so we don't really need a new market preview tomorrow night unless something major happens tomorrow. So let's just wrap up the week here with an overview of what's coming. Crude oil took a hit today, lowest close since early December, down $2.95 to $50.20. Gold was down 8. It's been on the decline here for about a week and a half, solid, approaching that red static trend line. Here's the S&P cash index, so it lost 5 points today, which is not a huge deal. The NDX was actually up 8, but you can see how flat that's been, also where it was about 15 days ago. Stocks up 2, also where it was about 15 days ago. Biotechs, this is the one chart that looks constructive and interesting. You have a nice cup and handle type of formation here, maybe an inverse head to shoulders. I mean, a breakout over the highs here would be an interesting move. The only thing I would say is 2 more candles up and we're going to have a 13 sell signal on the seeker on the biotech. So just as you get chart construction and look like you could go here, you got a sell signal from a timing perspective. The VIX up 41 cents just to 11.86. The trend finally gets a super low reading of 0.67. That brings the 10-day moving average back. Let's take a look. 1, 2, 3, 4, 5, 6, 7, 8, 9. So the next 2 days that are going to drop off the trend 10-day moving average are high readings at 1.5 and 1.8. So that, if we get low readings again, could bring that 10-day moving average back down. Remember, it's 0.85 on the moving average that matters. NASDAQ volume slightly higher on Wednesday than the first 2 days of the week, but still under 1.7 billion. Which is very light. Advanced decline ratio, again, negative. This time not as bad as the last day or two. Negative 520 on the New York, but horrible on the New York, negative 1371. 4 out of the last 5 days have seen horrible advanced decline ratios on the New York. Very interesting, even though we haven't moved down much. Google up $2.49. That's near all-time highs. Apple gives back 52 cents, but it's been dead flat in a horrible range for 5 days or 6 days. I got Amazon up 4.48. Remember, it's still operating under that 13 sell signal. Netflix down $1.11, but still holding near highs. And Tesla rolling over after hitting the 10-day moving average. That's pretty negative there. Goldman Sachs, one of the ones we're short here. So this one had a pretty sweeping day to the downside. It gapped up and ended up closing at the lows. It still is underneath and using as resistance the risk line from that 10-day. From that 13 sell signal, which is real interesting how technical this is, but yeah, that's interesting. So I think we might get a short opportunity on Thursday with Goldman Sachs. We'll certainly be looking at it in the room. Bonds were down 64 cents again. This is the TLT, the 20-year bond ETF, almost to new lows in bonds. Not good. All right, let's take a look at the intraday action, and then we will take a look at the economic data that still is coming out for the rest of the week here. So, the ES, like I said, it was pretty flat on Tuesday, left a small gap above, and then today basically gapped up a point or two, pushed a little higher, but it was in a narrow range for hours. Came down over lunch to fill the gap, tried to bounce again, and then 2 little mini sell-offs in the afternoon. The NASDAQ side was stronger early, pushed up a little bit better, back to the high of the prior day, but then still had those 2 waves of program selling in the afternoon that took it lower. All right, let's take a look at the economic data that's coming out this last part of the week. There's actually quite a bit left. 7:30 a.m. on Thursday, Challenger job cuts. 8:30 a.m. on Thursday. Import-export prices, initial and continuing jobless claims, that's the weekly number. 10:30 a.m. natty gas, that's the weekly number. Friday, big one, unemployment rate and non-farm payrolls. Well, it's a big number monthly. Probably not going to have a lot of meaning here yet. Still expecting the unemployment rate to be about 4.7%. And that's the non-farm payroll number that will matter. Markets are expecting about 185,000. We'll see what we get. Again, we probably won't have a market preview for Friday unless Thursday gets super interesting. It'll be a straightforward trading session for the rest of the week for us. We'll be calling from the tape. I'm doing my scans for tonight. Futures trading has been okay, but again, you really want bigger ranges than what we're seeing to expect to get very far here in the market. And hopefully that will start to pick up at some point here, because right now, being right where we were 15 days ago with very little action in between, it's not super interesting. Charts as usual brought to you by eSignal 12. If you've not yet taken a trial of our services, feel free to do so. We will help you out for a couple weeks. Have a great trading Thursday, Friday, and a great weekend.